Hi, everyone, and welcome to the BCCC Economic Outlook Global Economics Unveiled, the Navigating the Brazilian and Canadian Markets webinar. Here today, we'll hope to learn with our panel of experts about the current economic scenario and in the Canadian and the Brazilian markets. My name is Paula Saad. I am Executive Director of the BCCC, as well as co-chair of the Trade and Investment Committee, and also President of the Mandala Group. Today, I'll be representing the BCCC at this webinar. For those that are joining for the first time, don't know the BCCC yet, the Brazil-Canada Chamber of Commerce is a business association with the primary objective of fostering stronger commercial relations between Brazil and Canada, and this year we celebrate our 50th anniversary. The BCCC has 6 operational committees, which organize and host several events, in person and online, like this one, to bring value and content and networking to our members. So you can always check our upcoming activities. You should get an email on that as well. This webinar is organized by the Trade and Investment Committee. As part of the organizational culture, we start our events with the Land Acknowledgement and Diversity, DEI, statement. We would like to acknowledge that this land where we are is part of the treaty lands and the territory of the Mississaugas of the Credit, the territory of Ashnabik, Huron-Wendat, Haudenosaunee, and Obijay-Chapoya peoples, home to the Métis, and most recently, the territory of the Mississaugas of the Credit First Nation. We're grateful to have the opportunity to live and work in this land. Together we stand as leaders, embracing diversity, equity, and inclusion, the DEI. We recognize that DEI is not only the right thing to do, but the essential thing to do for organizational success. We lead the change, understanding that diversity and inclusion practices must permeate all aspects of our business. It is not a standalone initiative, nor confined to HR policies alone, but weaving the DEI to the fabric of our organization and cultivate an environment where every individual thrives, innovation flourishes, and collective potential is realized. With unwavering commitment, we engage with our employees to foster real and sustainable change. Let us forge ahead, united in our mission to create a diverse and inclusive future that transcends boundaries that elevate us all. We actually started with our DEI initiatives many years ago, even before it was trending, to have just more diversity in the business and in the chamber. So with further ado, we'd like to open this webinar with an economic overview delivered by John Welch, founder and CEO of Research for Emerging Markets. And John is also a professor in Florida. So John, happy to have you again.
My pleasure. And I'm still part of the Brazilian Canadian Chamber.
Yes.
Thank you very much, Paula.
I should have it there too. I'm sorry.
My daughter still thinks she's Canadian, even though she's Brazilian American. Thank you very much. Put this on speaker. Okay, very good. So I'm very happy to address all of you. Thank you so much. It's an honor to give you a talk. I'm going to be very short because the discussion is a lot more important than what I will put on this presentation. But I'm going to let data work for itself. I gave a presentation for the BCC in person in Toronto a couple months ago. This is kind of an update. Well, I'll just let the data speak for itself. I think the prospects for Brazil, especially in the sectors that the people that are going to be talking to you today, are extremely positive. However, macroeconomics is not so great. But anyway, let me go through that and give you an idea what it looks like. So here is my first slide. I am a professor also at the Universidade Presbiteriana Mackenzie in Brazil. So, and I'll be going down next week to give a couple of classes down there as well. Let me maximize this, because I did modify the title a little bit, because unfortunately my forecasts were correct, except I was too optimistic. So I do think we're going to see a change in direction, but the question is when. So here's a recipe book. I've added to it since I spoke in September, of all sort of a recipe that will create a recession and with inflation. And we're just following the recipe book of 2013 and 2016, and actually importing some stuff from before. first, at the end of last year, after the new administration was elected, Congress passed a massive primary expansionary transition constitutional reform. We'll see the data, but the amount of deterioration in the fiscal accounts is remarkable at how quickly has happened. They're also using creative accounting again to hide primary spending. They're using different ones now, really through the precatórios, and they've just changed the status of the precatórios so they can use certain deposits, state-owned, state-held deposits to pay those. But they've been using off and on precatórios for funding, sort of off-balance sheet funding. Marcos Mendes went through this in detail in a thing he recently published. They held gasoline, excuse me?
I'm sorry to interrupt, but are we supposed to be seeing the chart or a presentation? Because
the presentation. Oh, it's the chart.
We're seeing a chart.
Oh my goodness. Okay, let me get out again. Get out of here. I don't know why I did that. Maybe because it was when I put it. Thank you, Julia. Let me put this back over the other side. Now, do you see it? I'm just going to reshare this thing, okay?
Thank you.
How's that? Is that okay?
Yes,
Yeah.
now we can see it.
Okay, yeah, I have 3 screens and apparently I shared it on the wrong screen. So let me start that over again. Okay. So the title is Brazil pedal to the metal, but perhaps in the wrong direction. And so I did have this little menu here of a recipe. And this is sort of what we had before. And it seems the current administration wants to reconstruct everything that was put in place in 2013 to 2016. There have been impediments to this, however, especially in Congress. And that's where the optimism I have is still around. And people know me on Wall Street as always being optimistic on Brazil. It's a rare occasion that I'm not. But the first thing is this increase in primary spending that happened at the end of last year, the transition constitutional amendment. You'll see how big a change in the primary deficit there was. It's very, very big. The increase in spending was on the order of 4% of GDP. They've been using creative accounting, as I said, to hide primary spending. Again, not to the extent they did before, through the state banks, although they'd like to be able to do that, at least expressed by a number of the members of the cabinet. So they're using precatórios, which are judicial judgments that then become a liability of the government. When you pay them, it should be a primary expenditure. They're going to reclassify that as debt, which is then you can sort of get judicial rulings and use that as a financing mechanism because you can issue notes against these precatórios in the market and raise money. They've held administrative prices too long. Certainly the main one was gasoline. It's almost caught up now to the international equivalent price, but it was held below the international price for quite some time. That reflects directly in Petrobras's profits, which have become, at least all of the state enterprises are now losing money in the primary where they were making a lot before. They've increased in subsidies in general, but they've been blocked on this by Congress. So some of the legislation that was put in place that led to the overuse of state banks has stopped, at least on the margin, that from happening. But we've seen a fairly large increase in lending from the state banks, especially to countries that have defaulted to Brazil. They're reintroducing, they want to change the way that a subsidized interest rate is calculated. They redid it and made it a market rate. Therefore, you'll see later that you can see there's really no difference between the Selic and this base rate that is the TLP that is charged by state banks, but they haven't been able to do that either. They wanted to remove, the current administration wanted to get rid of the independence of the central bank. That was blocked by Congress. Also, other things were blocked by Congress. such as concessions, infrastructure, et cetera, especially sanitation. They wanted to change those rules. It didn't happen, which was very good. Something happened recently with Petrobras, and it's very clear in today's newspaper that the intention is to undo the privatizations of the asset sales that occurred from Petrobras after the petrol loan. And 2 days ago, the Brazilian government, Petrobras, rescinded a contract because they didn't perform on it. And the private investor that was going to buy the assets said, no, you don't have to meet this deadline. It's fine. We'll go ahead with it. But they rescinded the sale of assets to this fellow, and he said, well, I'm going home I'm taking my ball and going home. And then they sort of marched on the margin too. Again, Congress was resisting this, putting back in interest rate ceilings that went away in 1983. And that created massive problems during the 1970s and early 1980s with doing monetary policy portfolio shifts. So this is sort of the prescription that has been put there. Again, the central bank independence is maintained, and the central bank has performed very well. So let's see how they've done. Here's what's happened to inflation. You can see the inflation rate, whatever. I don't like all these cores, but this is the ones that the central bank and the coupon looks at. But there's other cores that they look at as well. You can see until the pandemic, the inflation rate was very well behaved. Brazil recovered the credibility of its central bank, and you had this surge because you had a big supply side shock and a demand side shock, which was reverted to a certain extent. And you can see Brazilians, the inflation rate now is just a little bit above the top of the band on a year-on-year basis, and it reached the center of the band earlier this year, but the central bank has loosened. Okay, so here's the way I look at the stance of monetary policy. I look at what are called these Taylor rules. It's a rule that was made up by John Taylor, but he actually used it to try to describe Fed behavior. But inflation targeting countries have adopted it as a rule to do, and Canada is one of them, to do monetary policy. And the real question here is, if let's say if inflation is above the target, then you have to raise the base rate, usually more than the difference in inflation, from the distance from the inflation to the target. And if you are, let's say, above permanent or long-term GDP, then you have to raise the rate also to bring down any inflationary pressures. And the other way around as well. If you're below it, you lower the rate to encourage consumption and investment. And if you have a deflationary gap or recession, you do the same thing. So if inflation's too low by the mind of the central bank, or if you're in a recession, you lower the rate. The main question here is this thing called R star. And I don't know if you listened, Powell, he made a very nerdy economics joke, and only economists thinks it is funny, but he was talking about the stars. Well, that's the R. Then he said, well, R star. So R star is the equilibrium inflation adjusted interest rate that typically you think of as being determined by the return on capital. But the question is, what is it? It's this thing out in the forms. And I spent some time trying to estimate it. The central bank does it. All the central banks do these things. I stopped doing that. John Williams of the New York Fed has the most famous model. But what I do is I just put a range of Taylor rules you get. It's just tells you where the Selic or the average base rate should be, according to where we are between inflation near its target and GDP. And you can see we're still on the tight end of this thing. Okay, so the difference is at the top of this band, the real interest rate, the assumed equilibrium real interest rate is 10%, and at the bottom is 2%. And you can see that the two rates, the Selic rate and the average base rate, have come together. That's the difference. Is that the average base rate is the weighted average of the TLP, which is the subsidized interest rate, and the Selic rate. So actually, if you go back to 2013 to 2016, despite the fact that the Selic rate went up quite a bit, and it had to bring the average base rate up to somewhere within this band. Actually, they weren't as tight. If you were just following the Selic rate, you thought they were too tight. Now it's perfectly the same thing. And the central bank still has room to loosen, which I expect they will as well. Somehow I've got the wrong graph here. Hold on. Just give me one moment, please. was redoing this morning, and I put the monograph up. So let me just anyway, I'll go to the debt thing, and I'll go back to the primary balances because that's kind of important. Let's go here first. Okay, so here's debt to GDP. And I use the general government debt, and sort of net debt was, the credibility of the net debt measure was messed up, was hurt by the so-called pedaladas, using the state banks to off-balance sheet finance primary deficits. But you can see we had a big run up in debt due to the pandemic, and started stabilizing before the pandemic hit. But when the pandemic hit, the federal government ran deficits and they borrowed more money. But then they got rid of their primary deficits, and we're back by the end of last year to the debt to GDP ratios of pre-pandemic. And you can see the difference between gross government debt and net government debt also went down because the state banks paid back the Treasury when they sold assets. So intergovernmental debt went down as well. I'm guessing that that's going to go back up again, but that's only a guess. The gross debt, it doesn't matter. That's the main thing that I'm forecasting, and it's going up at a very quick clip. So now let me go back to the other graph that I was trying to show you. Sorry about that. And can you see that okay? Oh, can you see this graph okay? So this is the gray line is the primary balance. That's the fiscal balance without not counting interest. You add interest in, you get the nominal balance. And then we have the Social Security part as well. And that stabilized. It didn't get better because of the reform, but at least it stopped getting worse. So you can see we had this big increase in the primary deficit. And then post-pandemic, we had fiscal accounts coming in, partially because of the recovery, but also the government got rid of temporary spending programs that were resuscitated in this transition. And you can see since then, since the end of last year, the primary balance has just dropped amazingly. It's been it's down right now. The October numbers should be about almost minus 2%. And their forecasts are actually worse now than mine for the end of the year. We've had a swing in this deficit of 4 percentage points of GDP. And the nominal deficit, because real interest rates on debt are going up, is going to even get bigger than that. So let me just go back to the presentation to give you my conclusions, and I'll give it back to Paola.
Thank you, Jim.
So how long and how much before we turn the things around? Those are in the market call this the pain trade. At some point, you know, I've been investing in Brazil, but mainly in fixed income. My recommendations are there. And we did have a big recovery in Bovespa, but at some point, you're going to get a reaction in Brasilia, and we're already starting to see it. But the interesting part about this thing is that the speed at which we've gone in the same direction where Brazil was during the 2013 to 2016. So was sort of the pedal to the metal. The speed of implementation is good in the sense that, you know, when you rip a Band-Aid off, the hurt goes away fast. So I think we're going to see some rather significant effects in 2024, which is fast. It took 6 years last time for the dilatory effects of these types of policies to take place before. And you can look at the 1970s as well, and that's exactly when the Geisel administration was in place. Similar policies took 6 years to lead Brazil to a default on its external debt. So the microeconomic policies also are not so great, but you can see Congress is doing a great job of holding the line there, especially with concession returns. And I do expect, we're already seeing this resistance in Congress, the ability to get things through Congress, especially some of these more extreme ideas, has gone almost to zero. And we're going to probably see a movement the other way. So as always, politics and all countries determine their direction. And once the pain is long and deep enough, but I don't think it's going to be all that long. It may be a pretty fast thing, I suspect. And so far, Congress and politics have stayed the government's foot in the sense that I'm talking about the accelerator. But of course, some sectors benefit, some sectors don't. This is a macroeconomic viewpoint. I'm going to turn this back to Paula, because I want to hear the stories about fintech. But I've been telling people about fintech in Brazil is they're way ahead of everybody else. And certainly when at my role at the Chamber in New York, I did a number of things there. So I look forward to hearing all the rest of you, and thank you very much.
Thank you so much, John. Very interesting. I have a few comments. I'll wait for everyone to talk in the end, but very interesting how this reversal of the Lula government, in the Petrolão, and then, now, stopping privatization. So that would be a good discussion for sure. So for our main discussion, we're pleased to have here today our great panelists, Julia Figueiredo, Director, LATAM and US at Partners for Growth, and Michael Kennedy, who is a financial advisor at CIBC, to join the stage. The next steps, Julia will have a quick presentation, and then Michael will have a quick presentation, and then we're going to have our discussion. Thank you so much. Julia, please go ahead.
Thank you, Paola. Thank you, John. Hi, Michael. Hi, everyone. I'm Julia Figueiredo, Director at Partners for Growth for Latin America and US. I have a quick presentation to share. And I'd like to thank the BCCC for this invite. So you can see my slides?
Yeah, can see your slide.
Yeah. Okay, great. So Partners for Growth is a specialty debt fund based out of San Francisco. I'll just go very quickly on what we are. So we provide custom debt solutions all over the world, started in the US, but we have portfolio companies globally. It was founded in 2004, so it's going to be 20 years now, working only with high growth tech companies, a little bit over $1 billion AUM, and we have two very strategic partners that some of you may know here in this call: IDB Invest for LATAM specifically, and IFC for emerging markets, and LATAM being one of them. So we have our global fund, and then a fund with IDB for LATAM, and a fund with IFC for emerging markets. So just a little bit of where we are: office in San Francisco and Sydney, and global portfolio. And by the end of 2023, by the end of this year, we're going to have 6 companies in LATAM. So what we do is venture debt, growth debt, and this is just to make it easier where we come. So usually a company raises venture capital, and when they're in this inflection point of growing really fast, not yet profitable, still burning, but maybe too early for private equity, private debt, or bank debt, that's where we come. Maybe I'll just go and talk offline. This is a little bit of our terms, but overall, we can write checks from $1 to $60 million, and we do fintech deals, asset-backed deals. That's mostly what we do, but we do also corporate loans as well. So I think John focused a lot on the economy. I'm just going to say a little bit about the tech markets. So all this data, and I forgot to give credit, I apologize, but all this data I got from Lavka. Yesterday, I also saw a very good report from Latitude that they just sent yesterday. But as most of you know, or people that are working and involved with technology, 2021, we saw a boom with $16 billion invested in the region. And that dropped significantly in 2022 and continued to 2023. And as you can, so on the annual investments, and then on the quarterly investments, we can see the drop has started Q1 and Q2 of 2022, and now it's stabilized, and it's probably going to continue on the lower levels for the next years. Here I just wanted to show a little bit of a distribution of where the VC dollars are going to in Latin America. So Brazil, 62%, Brazil, Colombia, and Mexico account for 98% of the VC dollars in Latin America. And then if you think about stage, it changed a lot. So a lot of the VC dollars in 2021 were going to early stage companies. And now we can see a shift to more later stage and venture debt accounting for only 4% now. And a lot of the venture debt deals were actually corporate deals. So I think 4% of venture debt in LATAM could be a right number. And but this number, I think it's going to grow in participation as we see in the US. In the US, venture debt represents 25% of the VC dollars. But VCs are still fundraising. So VCs raised 2.7 billion in 2021, 2.8 billion in 2022, and already 2 billion in 2023. So there's a lot of dry powder with these VCs that is going to have to be deployed at some point. And John touched a little bit on fintech. Fintech is still 30-40% of the market, depending on the source of truth. And we are seeing other markets as logistics, health tech, e-commerce, clean tech, and that reflects on what we are seeing in the market as well. Okay, so I think it was very fast, but this was me, and I set the stage to Michael.
Thank you. Great presentation. We've been talking about understanding more what the market is, and so it was very to point. So thank you so much about that. And I would like to just point out to everyone that we now go to all the bios of the panelists because the event program has been sent to you, and I believe it must be also on your chat with everyone's background and contact. So with that, Michael, please.
Oh, thank you so much, Paola. Thank you to the BCC for the opportunity to speak at this great event. And it's great to join this panel with John and Julia. I am a financial advisor with CIBC, but I would like to stipulate that these views are entirely my own and do not reflect the CIBC. And I will admit as well that I am very optimistic on Brazil as well. I don't have a presentation, but I do have some talking points that I'd really like to illustrate as I try to attempt to interpret what's been happening in financial markets in Brazil, kind of compare that to Canada, and really bring in lines with some of the investment trends that I think are going to continue that have been happening this year and will continue in 2024 and beyond. I think financial markets in Brazil or investors specifically were worried about 12 months ago when Lula became president. And there was a bit of nervousness about what a Lula presidency would look like for financial markets. But thankfully, as John pointed out in his presentation, the Congress is very strong and independent versus Lula and more pro-business. So I think in that scenario, it was very positive for markets. So over the last 12 months, the Bovespa has returned 12%. A year to date has returned 15%. And if you want to just compare that to the Canadian markets over 1 year has been negative, 1%, and positive 3% on a year to date basis. So Brazil has outperformed Canadian markets over that time frame. And I believe the main driver is, as I mentioned, that the markets were worried about what type of reforms Lula would implement, given that the market really favored a pro-business Bolsonaro government. However, Lula has implemented some financial reforms, fiscal reforms that have limited spending and also limited spending relative to inflationary growth. So the markets really interpreted that as being friendly because Brazil had a lot of structural financial spending problems that needed to be resolved. So all in all, I think the markets have interpreted that pretty favorably. Brazil is expected to have a fiscal surplus next year. So that's debatable whether or not see John shaking his head when I mention that, but hopefully that will happen. I mean, given the realm of fiscal spending happening globally, if Brazil can really restrain some of their fiscal spending, I think that's going to be positive, overall. And those reforms have really, as I mentioned, been reacted positively. Brazil did have their credit rating upgraded over the summer. At the same time, coincidentally, the U.S. had their credit rating downgraded. So, hopefully that's not hopefully, but that could be a trend of basic market leadership away from traditional developed markets, more leaning towards emerging markets. So that could be a trend that investors might be focusing on in 2024. And markets are anticipating that Brazil will continue to grow this year 2.84%, next year 1.5%, and 2% beyond that. Compare that to what the news that just came out today versus the Canadian markets. We've been experiencing a contraction in GDP growth. So investors are really looking at Brazil for opportunities for growth. And by all means, it looks like a favorable environment where interest rates are being cut in Brazil, and could be creating an environment where there was an article that came out in Valor Econômico today that could see a return of IPOs to the Brazilian market in 2024. So all those things could be very accommodating to a favorable investing market for investors that are focused on Brazil. Three main themes that I like to highlight when people ask me about where are the opportunities in Brazil. There is a real trend happening right now, and I think that's mainly derived between the tensions between the U.S. and China, and that's a nearshoring trend that's happening all over throughout Latin America, and Brazil is benefiting from that as well. Brazil is home to a lot of the raw materials that are needed to implement for the global economy to move away from fossil fuels and the energy transition. That's a big theme, a big story. But there's still, Brazil still lacks the supply chains, development of supply chains to really be a leader, I guess, in that particular phase. Given that supply chains in Asia are dramatically more developed in that sense. But investment and capital expenditures are coming to Brazil for focusing on the energy transition and clean energy. I believe that's going to be a market that is going to attract a lot of attention. There was unanimously passed regulations in the Brazilian carbon market, which I think is very interesting if you compare to the news that's happening in Canada these days. You're quite a contrast in stories where energy regulation here or clean energy regulation in Canada is a very hot political topic. So quite interesting that it was unanimously passed in Brazil. And in fact, at another Brazil-Canada Chamber of Commerce event, we had the governor of Espírito Santo come to Canada, come to Toronto, and give a presentation about how a lot of the states in Brazil are uniting around this clean energy transition and creating a clean energy carbon market. And obviously, Brazil's home to the Amazon, and that's a really important asset, I think, when it comes to carbon cap and trade markets that I think Brazil has. It's an advantage that it has over other markets. So if the the carbon cap and trade market can be developed, it's still in its infant stages. I think that's a real benefit for Brazil. Lula, being president, is said that he's going to protect the rainforest, the Amazon, and deforestation, according to stats that I read, is down 40% under his administration. And that is, in a nutshell, going to increase Brazil's standing and the ESG standards, and therefore clear the way for institutional investors that have strict ESG standards can now should now or could now be looking at Brazil as an opportunity to invest, given the improved ESG standards there. And as Julia mentioned, I think one of the biggest stories that's happening in Brazil and across Latin America is this technology story. If you talk to a lot of VC funds, private equity funds, this is probably the largest opportunity. In particular, if you look at Latin America and Brazil, the capitalization for technology companies represents about 3.4% in GDP for Latin America. And if you compare that to other emerging markets such as China and India, China represents 34% of technology capitalization in GDP, and China 14%. Those stats are from SoftBank, and that if you think that Brazil can match or meet up to these other emerging markets, you're talking about $1 trillion in value creation. That's a big opportunity, and Brazil is going to be a big contributor of that. And one primary example of that is Nubank. I'm sure a lot of the participants have heard of Nubank. Nubank is probably the largest fintech company in the world, publicly traded, and they have recently reached 90 million users, 90 million clients over Latin America, and have a 21% return on equity. Those are pretty extraordinary numbers. Brazil is actually a powerhouse when it comes to fintech and financial innovation. And I believe that other areas of technology innovation will come from the clean energy space as well. So that, in a nutshell, I think is what investors are focused on, and hoping on continued cooperation at the government level. Given that if you look at the global environment right now, tensions in Europe, Middle East, you have continuing tensions between the two major global economic powers. Brazil actually looks like a geopolitical safe haven, and it's kind of hard to believe that when you put those in words. If you think about Brazil in geopolitical safe haven, obviously they have the challenges, as John mentioned, regulation, local regulations, bureaucracy locally still remains a problem. But I really believe, and I feel confident, that there's the will of further opening up and making Brazil an easier place to invest and grow in business, as we've seen other reforms such as the tax reform, which I believe is aligned to attracting more investment in the energy transition and clean tech spaces. So those are my points. I hope you enjoyed it. If you have any questions, I look forward to our further discussion.
Thank you very much, Michael. Very complimentary to John's presentation, and also to Julia's. And I'm going to let you guys go into the discussion, but I'd just like to kick it off with a question for Julia. So Julia, when the new government came in, what was the reaction in the venture market? We saw the numbers, but as insight, what was the reaction right away in terms of having this new government come in? And if they saw it as a positive or as a question mark, and how do you see going forward, and the overall of really going to Bovespa and the overall investment in Brazil?
Well, I think that's a delicate subject, but with some of the investors and entrepreneurs that I talked to, I think the Brazil tech ecosystem has been thriving and now adjusted not only to the Brazil market, but also worldwide market. But the Brazil tech market has been growing and flourishing despite of a lot of the different governments. So I think it's mostly looking at what it's going on globally, and the investments that have been slowing down. I don't know if they were too worried with the new government, more just focusing on what they can do to continue their companies and raising capital and focusing on their business.
What type of valuations are you seeing right now for the Brazilian tech companies? Do you see a lot of headlines now of some companies reaching unicorn status in Brazil? Are valuations at issue at the VC level, or how are the deals investors or founders reacting to some of the offers that they're getting these days?
Yeah, I think after the record-setting year in 2021, with investments increasing and valuations going through the roof, all over the world, And when we started 2022, there were 21 new unicorns. And like we saw, due to market adjustments and globally, the valuations are going down. So we saw a lot of investors and entrepreneurs afraid of down rounds. And and that's why it was interesting for the debt markets, and we're seeing the spike on the venture debt and growth debt. So there was an adjustment in 2022 and 2021. But what I think and what I'm seeing is that this is going to adjust again, and valuations are going to start picking back up again.
So there seems to be a more favoritism towards venture debt, I guess, in today's environment versus equity. Is that mostly what you're seeing?
We are seeing, and also in the US, we are seeing new players. Well, we saw new players in Brazil, new players all over Latin America, new players in the US as well. And with new players brings pricing adjustments, but also regulations. So for us, for a American debt fund playing in investing in Latin America, for us was easier to do deals in Mexico, Colombia, and Chile so far. But we are not giving up. We wanna, and I'm Brazilian, so I wanna do a deal in Brazil, hopefully very soon. We're talking to a few companies. So I think the having more debt, venture debt, like I said, in the US, 25% of deals are venture debt. In Brazil, only 4, maybe a little less. I think there's a lot of room to grow on that side.
Yeah, it's interesting that this past couple of weeks, you've seen a lot of high-profile funds being raised, over $1 billion. A couple of funds that are announced over $1 billion, all targeted on Latin America, and so it's very, very exciting times. I think, you know, when you look back 10 years ago, you probably wouldn't have thought we would be here, but yeah, it's very exciting, all the capital that's being attracted to the region.
Yeah, but Kazakh raised $1 billion, and Bicycle shoe also. So I think they only those 2 funds accounted for most of the raise.
But capital seems to be, you know, attracted to the region, and hopefully that's continues that trend. John, I had another question for you about, and I think maybe the direction of interest rates might be a reason why that's attracting a lot of capital to the region in the technology space, as technology is very sensitive to interest rates. What would you say so central banks in Brazil particularly were raising interest rates at a time when, you know, North America, we were talking about inflation being transitory. Was the Brazilian central bank ahead of the curve in raising interest rates at that time? And you know, what are your thoughts on that?
The answer is yes, but it's also a combination that the other central banks are late.
Okay.
Very late.
Because is that because we don't have the experience with inflation, as you know?
I think there's generational amnesia. Luckily, I'm old enough to have lived during the 1970s and grow up and deal with Brazil my whole career, because I know what inflation looks like. So I kept hearing colleagues of mine that I thought were young, but they're not that young anymore, saying, oh, this is going to be transitory within the Fed. So I published through this thing in London. So I finally published my first one, and it's called Welcome to Inflation. I wrote this in early 2021. And then the second one was Welcome to Inflation 2, How Late is the Fed? And then I just wrote my 4th one. But anyway, yes, the central bank under Roberto Campos might have overeased. I think there's a couple of former presidents of central banks that were a little critical of the central bank for overeasing during the pandemic, but they were the one that tightened first and tightened the most. And they know, you know, a lot of experience with inflation knows you have to get inflation going down, and you have to make everybody believe it. And if you do that, it won't cost you in terms of output, because people will change their expectations, they'll change their contracts. And that's exactly what happened in Brazil. Brazil recovered very strongly despite these real interest rates. And now there's a lot of room to come down. The biggest enemy to growth historically in Brazil has been inflation. And the problem is I was at the Fed. I left the Fed in 1993 to go to Wall Street. Much later, we worked together at CIBC, but that was the last time there was inflation in the United States. So and Europe as well. So if you came out of your business school with an MBA in 1994, when the Fed started tightening, surprising everybody, which I was really not, but you'd have to be at least in your early 50s to remember anything about that. Mm-hmm. So unless you dealt with Latin America or Europe or other places that had inflation. So I think it was a lot of things. The Fed's models are really good, as is the Brazilian central bank's, the Samba model, except it's really bad at calling turning points. But because you have Roberto Campos and his whole team, Bruno, et cetera, all had a lot of not only economic forecasting experience, but they have a lot of experience in general with the markets. They were able to gauge it very well. So it's not an accident that Roberto Campos Neto was elected the best central bank president in the world last year. And the Fed is guiding. The problem is, credibility is a very evasive thing. It's hard to make. It's really hard to get it, and it's really easy to lose it. And there's all sorts of cliches like you got to put, if you let the horse out of the corral, or it's really hard to put toothpaste back in the tube after you take it out. But it's true. And Powell's doing a pretty good job of getting it back. But they did lose credibility. And you mentioned the Canadian central bank in our discussion before. So they have a lot of room. They have to keep an eye on the fiscal side, which they're making sure that everybody knows that. But really, it's been extraordinary and exemplary, the performance of the Brazilian central bank.
It's interesting that at the same time when Campos Neto was given the Central Banker of the Year award, that Latin Finance gave Haddad the Finance Minister of the Year award too. So it's kind of interesting that they both got it at the same time.
Yeah.
I don't know if that gives you more confidence.
No,
but
Minister Haddad has shown an ability to listen, which is a very important thing to do in that position, especially politically where he is. And he is, leaned against extremes. However, it's the policies that we're getting especially on the fiscal side, are not optimal. They put in place, they got rid of the spending ceiling, which was, to me, a big mistake. A rule, for it to work and be credible, it has to be simple and strong. This is sort of like that diagonal exchange rate that Brazil put in place in early 1999. It was sophisticated and weak, and this novo arcabouço, even if it was done correctly, it's not going to work. So I have my real severe doubts that we're going to have a zero. When they talk about deficits, they're talking about primary deficits. Your debt the value of your debt as a government equals the present discounted value of all future primary surpluses. If you keep a primary balance of zero, your debt, you can't borrow. So to get back to where you can, you have to have a primary surplus. And Brazil has done a very good job of that over the last couple of years. So I have a question for you, Mike.
I'm listening.
When we were together at CIBC, we were looking at private public sector partnerships, and CIBC is, and many of the Canadian banks are really at the forefront of this, the cutting edge. I remember traveling and you saw this. The states have done a much better job in Brazil of making the contracts really well done. But that was the main from our bank, the bankers at CIBC. The main concern was the contracts were not good enough. The collateral wasn't good enough, et cetera. Where do you see that right now? Sort of in the states, not only you had Santa Catarina, Paraná, São Paulo, and Espírito Santo, as you said, the state contracts are quite good. But where do you think we are in that stage?
Where do you think you are in terms of Canadians participating more in Brazil?
And where the contracts at the level that up in the Caribbean too. Right? So.
I look at right now, and I can't speak specifically for CIBC, but when I look right now in because I'm a big advocate of Brazil, Latin America. Well, when I look right now at the global context of where Latin America is versus the rest of the world and what the outlook is 2024 and beyond, I think our traditional partners here in Canada U.S., China are becoming way more protectionist than they have historically. And I think Brazil, Latin America is opening up to becoming more business friendly. I just think that's, if you were to make that statement 25 years ago, you would have gotten thrown out of wherever conference you were at. But today I think you just have to think about that and saying where are you going to be making your investments over the next 5-10 years, and what is the environments that seem to be a little bit more predictable, because as you know, financial markets and investors like predictability. And I believe that Canada really needs to be paying more attention to Brazil and Latin America. And we do. It's not that it's not that Canada is not present in those markets. The Canadian Pension Fund is a big investor in Brazil. They've invested recently in a company called Mumbak, which is a clean energy company. They've invested in Gympass. They've invested in a lot of companies in Brazil. And these are long-term investors. Brookfield has made lots of investments in the area. So longer-term investors, I think, are still, they're looking at really as the opportunity. And if you look at the news today, that the Canadian government is trying to pressure some of the institutional investors here in Canada to invest locally, but I just don't think that the real investments are available here locally, and that's why I'm advocating right now to to clients about investing in Brazil for that particular reason, because the global context right now, it favors those more business friendly environments in Latin America. So hopefully that answers your question.
Well, I have a question for Julia, but let me just comment on what you said, Mike, because when I got to Canada, I was absolutely shocked at how advanced the pension funds were in venture capital and private capital investments. It made the U.S. pension funds look kind of silly. And there's a reason for that. And if the government starts pressuring the pension funds to invest locally as opposed to where they can get the highest return, that's going to hurt the return on your guys' pension. So that's not a very good thing to do. But I was absolutely impressed. Supermarkets, highways, all over the place was really extraordinary. And I'm sure that they're thinking about fintech. But my question, that's just a comment on that. But it really was very, I had my comeuppance as an American. Julia, the question I have for you is, now, I still have some questions about fintech in Brazil. I done a lot of work on it, at least investigating and teaching about it. But there's a couple parts of fintech that are really, this is the product side, not the venture capital side, which are really fascinating to me. The first is open banking, because that seems to me to be something that is really where Brazil has shined. And oddly enough, Banco Brazil is a leader in that, right? Why does that work? Well, the whole market piggybacks on the banks. The banks have the best information about borrowers. So, you can go through Santander, Bradesco, you can do on a moment, you can lend money to somebody else through their due diligence. That seems to me to be an amazing thing. Second, we have Peaks, but that's they're excellent. It's great. It brings banking to a lot of people that would not have access to it, which is really fantastic. Cryptocurrency, I'm a little bit doubtful about. But where do you think, where are the areas, and then when I was at the chamber in New York, we'd always have American companies, we want to go in and do fintech in Brazil. And I say, well, they're way ahead of you, right? But can you give me an idea sort of where all these different products are in terms of tech?
Yeah, I think in the beginning, it really started with the banking fintechs, like you mentioned, and then the infrastructure and software fintechs, then the payment fintechs followed. But I think the companies that are aiming to fill up the gaps of lack of credit and a lot of rejected payments are still a lot of opportunities. And I was seeing a lot of, and on my day-to-day, I talked to a lot of fintechs. They're trying to solve also the access to credit to a lot of very low income part of the population. But there is a gap also the middle income population that I haven't talked to many of the companies trying to solve that problem. there's still a lot of obstacles. There's for the fintechs in Brazil, like like high cost of capital, obtaining and securing customer data. There's a lot of competition. The regulation space, also the crypto space. I don't know I don't know if I'm so bullish about, but I don't understand much. So, and open finance.
Thank you. Thank you, Julia. We have 4 minutes left. Usually have something in the panels that I lead that it's a crystal ball question, which is a 1-minute answer or less, in terms of what do you see happening, next year, 2024 in Brazil, and it might be an economic or political arena, and in what it relates to Canada, if you have that information. So let's start with Michael.
Yeah, thank you, Paula. So outlook for 2024, still remain positive as interest rates start to come down, become a little bit more favorable market for investors. And I think a lot of the trends that Julia just mentioned are going to be continuing to open banking. It's quite a shock to Canadian investors when they realize that Brazil is the absolute powerhouse when it comes to fintech investments. So, they're continuing with their, the payment systems, the PIX systems. That's really going to evolve and, really see a lot of benefits for the Brazilian economy as they catch up from a tech perspective, from terms of market cap with the rest of the emerging markets. So that's a big trend that I think is going to happen, and I'm very, very bullish about and very optimistic.
Thank you, John.
Well, I've already sort of filled your plate with forecasts. I think growth is already slowing very quickly, and inflation is coming down. There's room. We'll see if it stays there. If they do loosen some more. But I would like to think there's something else here that's structural that has made me this sort of perennial bull in Brazil, and I had a reputation of that, at least because I got there to Wall Street after the Kohler plan. But it's the reforms that were done in the 1960s and done by Roberto Campos' grandfather, Roberto Campos, the original Bobby Fields. And Roberto Campos seems to be following that as well. He's trying to give access to financial markets to everyone. In addition to that, over the years, we've had a number of reforms in terms of governance, in terms of markets, and really having an active capital market, which is not the case in all the Latin American countries. So you actually have a very active market for ownership, and that came about through a sequence of leis de sociedades anónimas, the Mercado Novo, et cetera, and trying to improve information. And that really has made, I think, Brazil for a model for Latin America, where you have the management market and the ownership market all one. Brazil has incredible managers. They've developed them over the years. And you have companies that are used to having to change direction all of a sudden and reorganize things and very well. So I think this churn is kind of upsetting. It's unsettling in the United States as well as Canada. But I have to say, this puts Brazil really on a great trajectory. And I think it's impervious to whatever the government's doing in politics.
Thank you so much. Julia, I know you have a hard stop at 2, so please go ahead.
Well, I think John and Mike already said well. I think it's for 2024. I think it's going to be a stable for tech, at least stable yet a slower growth environment, just mimicking globally the markets globally. And I think I'm excited to, other than fintech. I'm seeing a lot of companies daily on e-commerce, health tech, and ed tech, and clean tech as well.
Thank you so much. So we don't have time for Q&A right now. If you have any questions, I do have some questions, and I don't know about the YouTube. I don't see any questions here. So we're going to close the official part of the webinar, and if people would like to stay on and have questions answered, John and Michael will be available. So with that,
Thank you.
Thank everyone for the insightful and relevant discussion that we had. Thank you for all the attendees for participating and staying to the end. So thank you so much for that. This webinar was recorded and will be available on YouTube the next few days. And please don't forget to follow us on social media and stay informed of the upcoming events. And thank you so much to our panelists for taking the time and preparing for this webinar. We do really appreciate it. And if you like to stay on for questions, please stay on for questions for the attendees. Thank you.
Muito obrigado.
Obrigada. We don't have any questions on the Q&A right now, but I had a couple questions for you guys if you have time. We're looking at with the Lula government and the backpedaling in terms of getting the privatizations off, and going back and stopping that. And like John, and Michael, what's your idea in that? Like, what's the reason for the Lula government? What's behind this decision?
Well, I guess I'll go first. I'm not a psychiatrist nor a psychologist. I'm a social scientist. And this was the expressed intention of Lula as the candidate. It's been the expressed intention of Lula since he was a union leader in the late 1970s to stop any movements towards privatization. Remember, when Cardoso was doing the privatizations, he had to send teams of lawyers because the lawyers from the PT were continuously getting injunctions against privatizing different things, including Telebrás. I can't, the success of many of these privatizations, especially Telebrás, I don't know where the idea comes from. In fact, it enhances the strength of the government, doesn't weaken it. Perhaps it's resources that they want to have control of. That's the only thing I can think of at this point. Or, Petróleo Nosso, et cetera. But the public sector has proven to do better with a much more open and competitive Petrobras than when it was closed. So and some of the other things, even if they don't go out to fully privatize. So I can't think exactly, but if, I've read the histories of the PT, my insight into the PT is somewhat limited, but I do think it doesn't fit into their strategy. Their strategy was to occupy power spaces, especially in state enterprises, and sort of take over that way. I won't comment. I've already said some controversial things. I'm not going to go further there. But the incentives, at least, you have to believe what they say. You can't, like some of my colleagues in the financial markets, think that, oh, he's going to go back to being Lula 2002. Lula 2002 is a very cynical one. I bet heavily. C-bonds were at 42. I bet an investor in Europe that they'll at least get to 90 before 2 years are out, and I won the bet. She still owes me that bottle of wine. But anyway, the same thing. Why? Because he looked at the markets as if they were the military. They could put him out. Yeah. Now he's not afraid of the markets anymore.
Value right now. Like you have to look at what the government's saying as face value.
Yes.
And go from there.
Hey, I think, one of the main reasons might just because of market conditions. There really haven't been a lot of deals, a lot of IPOs over the last couple of years, just because of the external environment with, the central bank in the United States raising interest rates, causing a lot of uncertainty over cost of capital and asset prices. So, and he's probably trying to stay true to his roots, the people that put him in office. Maybe if the market conditions become a little bit more favorable where they can fetch better asset prices, that he might pursue privatization. But yeah, I think for his first term, if he does get a second term, but he probably will be will stand pat.
Okay, awesome. And one maybe last question for me, it's great that we have a central bank with certain independence that's really good and the way it's going right now. But when you look at the inflation for Brazil for last year, we look at between 2 and 10. What's the medium in that? And I do see the investment in Selic rate will continue to be, the fixed investments will continue to be good following that. But how do we really see the first quarter of 2024 in terms of the inflation rate and in Brazil and after that towards the end of the year?
I'll tackle that a bit. It's I've moved everything out of equities into fixed income last year because I expected rates to go up, and as they went up, I thought the long end would behave well. And that's basically what's happened. And actually, we had an inversion for some time, and that'll go away as the central bank cuts. So the very best place to be was in fixed income, CDI or whatever you wanted to do. And slowly but surely, I'll be moving somewhere else. We've seen a lot of volatility in the Bovespa. In dollars, it's even higher because it brings in the dollar exchange. So there's two things going on here. One is the dollar. And many people, oh, why is the dollar so low? Well, the question is, why wasn't it low before? And it's still quite high. In the real is still weak in real terms. And the reason this is the first time this has ever happened when commodity prices go up as the terms of trade go up, as way they, at least in 40 years. The reason is the fiscal stance was much better. A stronger fiscal policy weakens your currency in real terms because it puts less pressure on domestic goods prices. Now, with the loosening, you're seeing a strengthening. And, the question is, how long will that last until people panic? Brazil's debt ratios are still reasonably okay. The deficit numbers are not so good, as I showed. But the question is, okay, then it becomes a question of market timing. In the meantime, the economy is doing well. It's slowing down. The question is, how slow will it get? So I'm still sort of the mind that you're better off in fixed income with the slowing economy and the things that are going on the real side, especially on the fiscal side. And I'll be thinking about what sectorally, there's probably good ways to go with some of the named equities. I'm not an equity picker, so I'm not going to go too that far on that, but the equity market is cheap. But they also will now have to compete with Argentina because Argentina is really cheap. And if Argentina does dollarize or stabilizes inflation, there's a lot of money going to go into Argentina. It already is going there.
Okay. Michael, any comments?
Yeah, I don't disagree with John about buying fixed income right now. I think if you can get double digits on Brazilian bonds, and if they continue to cut rates, I think you're going to see even better returns on the fixed income side. And comment about inflation, I think the central bank is, their target is 4% in Brazil, and I think they're like lots of central banks around the world, they're pretty adamant and determined to keep inflation within target. So I think over the long term that the central bank in Brazil will be successful in keeping inflation under control. And as John alluded to, the currency is quite cheap versus the rest of the world, versus the U.S. dollar in particular. And I think that's what makes it pretty attractive too. So I think if you can see some trading out of U.S. dollars and into Brazilian currency, then you'll see some strengthening of the Brazilian currency, which could help.
Thank you. We have one question here from the attendees is, do you believe that the further expansion of BRICS bloc with the possible admission of new countries could impact Brazil's status as a geopolitical safe haven?
I'll try that, and I'll try, this is, a lot of this is driven by an anti-U.S. sentiment on the part of the current administration. And it's explicit. I'm not making this up. I'm not trying to be polemic or anything like that. It's explicit. It's stated. Lula doesn't want to use the dollar. They want to create their own currency. I got that question 2 weeks ago when I was giving a talk here. My answer is, I don't think it has a chance in, anything above ground to happen. Why? Because who's going to buy a currency backed by Russia, Brazil, China, and South Africa? And India. Doesn't really make much sense. And everything clears through dollars in the end. They could do sort of like barter trade, which that's what they're trying to do, but it's still everything that starts out and ends with dollars. So it's, in terms of a safe haven, there's already massive disagreements within the BRICS right now. Russia does not like let's say the initiatives that Brazil has brought in. China's kind of ambivalent because they think they control everything, and they probably do. And India is just sort of there, and South Africa kind of there because they don't want to be, they want to keep their ties with these countries. So I don't think there's a huge future in that, just like I don't think there's a huge future in Mercosur. However, does that mean Brazil and Argentina are going to break their ties? No, there's too much common interest in both countries. So Milei sent his chancellor-to-be the Anamonbino with a letter inviting Lula to his inauguration. A very nice letter compared to what he was saying in the campaign. We'll see, but certainly interests are more important than ideology. I still think that's the case in terms of determining policy. And I think there's reasons these things will go ahead, but to become a safe haven, I'm sort of very skeptical about that.
And that's a good point in terms of like the campaign talk and the, and the reality, because people have been asking like, well, so there'll be no Mercosur anymore and they're pulling out and being the two major, players. And what I said is like, we'll have to wait and see if this is really going to happen. Mercosur was many years in the making. It has been standing, especially between Brazil and Argentina. And producing, especially because Argentina is so inexpensive now, and importing into Brazil, it has bring to Argentina especially a lot of money into the country, I guess, and jobs. So I don't know how that would work. Okay, so we're gonna actually close now. I don't think we have any more questions. We just went 11 minutes over. It's not too bad. Thank you so much for everything. And Carlos is actually thanking you for your response in terms of the Jolicoid Safe Heaven. And we'll see you guys soon. Thank you so much for your knowledge and and for being part of the chamber. We really appreciate you.
Thank you so much.
Oh, thank you. Nice to see you again, Mike. Nice to meet you.
Nice to see you too, John. Hopefully see you in person again soon.
Definitely.
Thank you.
Take care. Bye-bye.